Internal Revenue Service IRS tax news. IRS seniors, retirees not required to take distributions from retirement accounts this year under new law. IR 2020-162, July 17, 2020, Washington. The Internal Revenue Service today reminds seniors and retirees that they are not required to take money out of their IRAs and workplace retirement plans this year. So typically the rule is that if you're over a certain age, say 70 and a half, then you will be required to take a minimum distribution, and whenever you take money out of a traditional IRA or retirement plan such as a 401k, you will typically have to add it in as taxes. So if you don't need the money, it would be nice not to be required to take the money out, because then it would not be taxable, lowering the taxes, and possibly if it was significant, could bring you down to another tax bracket even, or something like that. So it would be beneficial then, if you don't need to take the money out, then to not take the money out and not have it affect or be counted as income when doing so. Back to the text. The Coronavirus Aid, Relief, and Economic Securities Act, or CARES Act, waives required minimum distributions during 2020 for IRAs and retirement plans, including beneficiaries with inherited accounts. This waiver includes RMDs, required minimum distributions, for individuals who turned 70 and a half in 2019 and took their first RMD, required minimum distribution, in 2020. Roth IRAs do not require withdrawals until after the death of the owner. So the Roth IRA is a little bit different because you took the tax at the beginning when you put the money into the Roth IRA, so they don't have the same kind of requirement to take the money out at the end. It's not going to be counted as income in the same way that a traditional IRA would. So what if I already took my RMD, required minimum distribution? If an individual has already taken an RMD in 2020, including someone who turned 70 and a half during 2019, the individual will have to have the option of returning the distribution to their account or other qualified plan. So you can return it. If you already took it out, then you say, okay, can I put it back in now and return it? As long as it's under, it should be under the same kind of umbrella, subject to the restrictions to be counted as income, once again, when you take it out at a future point in time. Since the RMD rule is suspended, RMDs taken in 2020 are considered eligible for rollover. Therefore, RMDs can be rolled over to another IRA, another qualified retirement plan, or returned to the original plan. An IRA owner or beneficiary who has already received an RMD in 2020 can also repay the distribution to the distributing IRA no later than August 31st, 2020 to avoid paying taxes on that distribution. IRS Notice 2020-51, there's a link to that here, also provides that one rollover per 12-month period limitation and the restriction on rollovers to inherited IRAs to not apply to this repayment. So it's not going to be basically counting as your rollover, limiting the amount of rollovers that you may otherwise have. The CARES Act provision apply to most retirement plans, including traditional IRAs, SEP IRAs, simple IRAs, 401k plans, 403p plans, 457 plans, profit sharing plans, and other defined contribution plans. The RMD suspension does not apply to qualified defined benefit plans. Where can I find more information? More information on the CARES Act and retirement plans, including frequently asked questions, FAQs, can be found on Coronavirus-Related Relief for Retirement Plans and IRAs Questions and Answers. There's a link to that here. There'll be a link to this in the description.